Fubo could easily be the best investment that you've ever made, but that all depends on when you buy it, and it also depends on how you play it. It could very quickly turn into a life-changing experience for you, but you have to know exactly what you're doing. So, in this part 1 of a 2-video series, and you will be getting part 2 tomorrow, but I'm going to use this video and the second one to open your eyes a little bit and show you exactly what's going on here and how to make this work towards your advantage. So don't you go anywhere, because we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. What is going on, ladies and gentlemen? Welcome back to the official Fubo channel. Welcome back to another Fubo video. So today we're going to be talking about Fubo. I'm going to be sharing some very important information with you, but make sure you stick around till the very end, because I saved the best for last, and I've got something very special for you at the end of the video. Now, I want to get right into it, ladies and gentlemen, but before I do, I would like to ask you to please consider giving this video an early thumbs up, as it greatly, and I can't stress that enough, helps us support this channel. I put a lot of time and effort into each video so that we could all make money from the market together. And if you're not part of the family yet, I want you to join my family. We're growing fast, both as a community and financially by the day. All you have to do is hit that subscribe button, and don't forget to tap that bell so you have access to videos as soon as they come out. Let's talk about how all of this started. So on December the 21st, we saw an analyst upgrade, which I made a separate video about, so I'm not going to go into all the details here. But essentially, the analyst doubled her price target from $30 to $60, which caused Fubo shares to rocket by 58% over the next 2 days. And finally, on that Tuesday, which was Tuesday the 22nd, the shares, or the stock, closed at $62.29, which was a new all-time high. Then on Wednesday, December the 23rd, BMO Capital analyst named Daniel Salmon downgraded Fubo from outperform to market perform. A lot of people took this as bearish news, but what no one is talking about is the fact that the analyst actually raised his price target from $33 to $50, and his downgrade essentially was just saying that Fubo was a little overvalued after that 58% run-up and didn't quite need to be at $62 per share. And that's completely understandable. I agree with him. And I find that to be pretty reasonable. I mean, $50, a $50 price target, there's nothing wrong with that. But what I will say is this, the Lightshed analyst, his price target of $8 is just laughable. Now, what's troubling about this is that he is an analyst that's supposed to know the industry inside and out, and that's why his word had such a great impact, or his downgrade had such a great impact on the share price. Or did it? So here are the facts. Number 1, there was a shareholder lockup expected to expire 7 days after his downgrade. Number 2, there is usually some profit taken or selling expected when a company is heading into a major event, just like this one. Number 3, bullish Needham analyst that doubled her price target also advised us of the worst case scenario, which would be that the float could double and have a very negative effect on the share price. Although the market chose to ignore the latter part of this news when it was reported and instead decided to run with the good news, I believe that it was that news which planted the seed that would ultimately lead to the chain of events that caused Fubo to take such a hard hit. And here's what we have to remember. Sometimes the market has to take a little bit of time to process the news, and that's especially true when the news isn't clear. But once the market does have a chance to process all of this news, it'll try to correct itself. This is especially true when there's fear in the market, which brings us back to the seed being planted, which is why we saw such a negative reaction to the BMO analyst, which really wasn't that concerning. In fact, if you'll take a look at this quote from a recent article, you'll see that the BMO analyst is highly bullish on Fubo and has a similar outlook to that of the Needham analyst. And it sounds like he's optimistic about the company's future and expects near-term catalysts. And the reason that this is important is because this analyst has been covering Fubo for a while now and has had several interviews with company leadership. and keeps in touch with them to get updates frequently, while Richard Greenfield and his crew, which are the analysts from Lightshed, sit there and make up stories to try to crash innocent stocks that don't deserve it. And I intend to prove that to you right now, ladies and gentlemen, because I'm fixing to show you some data that not only contradicts what Lightshed is saying, but also I have proof that they saw it and commented on it, tweeted about it, and yet they still couldn't get it right. First, to give you a better understanding and how to interpret this analyst coverage when I show you the data, I need to point out a few key things that the analysts at Lightshed are saying. And for purposes of keeping this video as short as possible, I'm only showing you some of the contradictions here, but I think that these are big enough for you to get the whole picture and understand exactly what I'm trying to show you. So number one, Fubo TV service isn't differentiated from the competition. Number two, the pay TV sector is down 5 to 6% overall. And Greenfield calls this a secular trend and not just a one-year phenomenon. So to comment on the differentiation, there are a few key ways that Fubo differentiates itself from its competition, which is exactly why we're seeing the type of growth that we're seeing out of this company. But it's not just that they're growing faster than their competition. I want you guys to understand that they're experiencing extremely phenomenal growth right now. Okay, they're adding subscribers at an incredible rate. They've grown by nearly half from 2018 to 2019, and by 58%, so a little bit more than half from 2019 to 2020. And if we look at the last earnings, we see that subscription revenue grew by 64% and ad revenue was up by 153% year over year. This is huge growth and tells us that this company, Fubo, is taking market share away from its competition. But Fubo essentially differentiates itself from its competition, number one, by being focused on sports first. But what you guys won't see anywhere in this paperwork or in their filings or anything like that is that Fubo is a tech-first company, actually. They work on all of their own software in-house, and that's how they've been able to excel and grow so quickly in comparison to their competition. This is important for several reasons. If you look at your screen right now, you'll see their ACM, or adjusted contribution margin, which basically shows that they're holding their user engagement, their subscribers' engagement. We can see that that's growing over time, and then growing by phenomenal numbers here. What that's letting us know is that their users are actually interested in the platforms. Now, to give you an idea of how this works with other companies, your average cable subscriber is watching 4 channels, at least on a consistent basis. So there's not much engagement there, nothing much that's pretty much tying them down to that platform. But with Fubo, you've got 16 channels on average that each subscriber is watching, which means that there's a lot of engagement, a lot of watch time, which is always a very good sign and a sign of future customer retention, or that at least that they're going to be able to keep their customers on the platform. So let me explain how this is tied to them being a tech company first. Well, they're able to build out better software, better platforms, and basically a platform that understands the user much better than their competition's platforms understand their users. So they're able to recommend better content. They're also able to add features more frequently and better features than their overall competition. So this is how they're able to grow their user engagement and keep a higher retention rate than most of their competition, which is why they're growing at much faster rates. This is good for not only advertising, but obviously many other reasons. And they're getting a lot more subscribers simply through word of mouth. But I think we all know that the company markets itself as a sports-first platform, which is their main competitive advantage. Now, I know that some of you may argue, well, there's other platforms out there that offer sports content, and that's true, but none of them offer it in the way that Fubo does, and none of them have the amount of content that Fubo does. Now, another thing is that Fubo offers this in extremely high quality, such as 4K, and then they've got the multi-view. And if you're not a sports fan, you may not understand the advantage over them having multi-view or being able to watch 4 channels at the same time. But here's the significance in that. Now, have you ever been to a sports bar or a restaurant where they've got multiple TVs on every wall? and you're watching different sporting events. It's the same idea here. Now, a lot of your hardcore sports fans, they may want to catch multiple games at the same time. Well, the only way they're going to be able to do that is by having multiple channels on at the same time. So what better way to provide that than through offering a multi-channel view in an extremely high definition? Here's something else that a lot of people don't know or don't understand about Fubo. While they are a sports-first platform, they're also a platform for the entire family. Now, their best features certainly are is gonna be the sports package along with the news package. They offer more news channels than you can get anywhere else. And these are two things that really retain their customers, new subscribers go for. But when you get there, you stay for the rest of the entertainment, which is suitable for the entire family. And now let me just point out to you very quickly that this whole virtual MVPDs has grown 24% year over year steadily. Now, if you'll recall, the analyst from Lightshed said that it was down overall 5 to 6% and said that this wasn't just a one-year deal. So I want to point this out. This comes from Antenna Data, which is a much more trusted source than this analyst. Now, let me explain another thing to you guys here. So first of all, we see a big spike from 2018 to 2019, and that's because a lot of these services were new and just coming out at that time. And so we're gonna see a lot more or a lot higher numbers than we are later on. But at the same time, this industry is also growing and expanding, and there's still tons of room for growth because we still have a bunch of people using cable. And the people that are using cable still, they're using cable due to sporting events. And this is where the big money is going to come into play for Fubo in the future. And now let me make one final comment on how Fubo differentiates itself from the competition. So we know that they're getting into the sports betting sector. This is going to be huge growth for them. And what I want to point out, and we're going to touch up on that a lot more in the next video, but the same analyst is also saying that they don't make any money and they're not profitable. And of course they're not profitable. They're a growth company that's in its infancy, basically, and you can expect to see that out of any other growth company at these stages. But what he's not saying, or where he's wrong at, is that they're not making any money. Their revenues have grown by 64%, and that's what we've seen from the last earnings. So how can they not be making decent money or good money? We see that they're making very good money. Then he also talks bad about ad revenue and acts like it's not profitable. Well, they've grown their ad revenue by 153% from last year, which is only 7% of the revenue that they're earning total. So those are really good numbers. That's really good data. That's exactly what I would want to see out of this company. But keep in mind that just because they're doing one thing right now doesn't mean they're not going to expand into other things. And this is what he's not considering when he's talking about it, or he's probably considering it, but he's just not telling you guys that or not announcing that because he's short on this company, or someone that he's involved with is short on this company. And I'm going to get into all of that in the next video. But I want to wrap this video up on a very big note here. So what I want to point out to you guys is on the right-hand side of your screen, we see a tweet from Rich Greenfield, the same analyst we've been talking about for a while now. And he's commenting on this data, market share data, that was posted also by Antenna. He tweets, "Looks like Fubo is adding about 2/3 the gross ads of Hulu Live and YouTube TV in Q3 2020, according to new data released by Antenna Data." Now, he's got a very interesting way of looking at these things, and I guess that's why there's so much controversy out there when there's different analysts, because people just seem to have different ways of looking at things. So the way that he's looking at things, to me, is all wrong, but we're not going to talk about that. But what I want to talk about is how I'm looking at things. So if you take a look at the data from January through November as a whole, you see that Fubo started out with 7% of the market share in January, and now, or in November, it had 19% of the market share. So that's 12%. Now, YouTube TV started out with 41% in January, and in November ended up with 30%. So that's an negative 11%. Hulu went from 27% in January to 28% in November. So that's a 1% growth from, January through November, a 10-month period. So it's obvious to me that the most growth is coming from Fubo. These other platforms, these major players, are either decreasing significantly or losing market share significantly to Fubo, or pretty much staying flat just about. I would call Hulu's growth flat. So I don't know if you guys are seeing it, but let me know in the comments below what you think, what your thoughts are, how you look at things. Let me know if you support this analyst's view or if you think that I'm right. One thing that I got to tell you guys is that I have a lot more content to share with you guys about Fubo, which I intend to share before the markets open on Monday. So look, I'm going to be straight up honest with you guys. I think that there's a pretty good chance that Fubo will continue dropping. And I'm going to get into all the details of that in this coming up video, which will be tomorrow. And there's a huge reason why I say that, so make sure you're staying tuned for that video, which is also where I intend to share with you guys my exact plans for Fubo and what I'm doing. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.